Paul, you're so dumb. You don't get it. Stock's at $67 and going to the moon. You don't necessarily need cash flow today. When our stocks go down, we love them even more. Can they increase their gross margin? Sure, they absolutely can. All right, guys, NIO just reported on Friday. This is the electric car manufacturer in China. This is an interesting company, and the reason being is I want you all, if you're new to the channel, it's really, really awesome if you can go back and look at our videos back in early 2021 when everybody was making fun of us because we made fun of all these hypesters, all these other YouTube scammers out there, and Kathy Wood, not a YouTube scammer, but a scammer nonetheless, and they were all hyping all these companies like this. And look at early 2021. Paul, you're so dumb. You don't get it. Stock's at $67 and going to the moon. Last time I checked, when you go to the moon, you go up. This is down a lot.
Maybe it's an alternate universe we're living in.
Now, Mo, have we had stocks go down that we bought?
Yeah, of course.
Absolutely. But the difference is when our stocks go down, we love them even more because they generate cash flow. We can assign a value to them. And when the market is emotional, we can buy. Let's look at NIO. How much money did they make last year? They lost $2.1 billion. Sick. Well, maybe they made cash flow. Nope, they lost $307 million. In the last 5 years, they've averaged losing $800 million. Gross margin, 10.5%. Guys, you could literally start you could start a lemonade stand on your corner and have a profit margin higher, gross margin higher than 10%. Let's look at a company like Tesla. Tesla's current gross margin is 23% in the last 12 months. Let's look at Ford, an antiquated car business, 15%. Toyota, learn how to spell Toyota first, 17.2%. Okay, so does NIO have a lot of potential, Mo?
Yeah, of course, because they have growth potential.
Absolute growth potential. Absolutely. You're 100% right. But they're losing money hand over fist. And that's not necessarily a bad thing. However, I value things all the time that are losing money. Whenever we buy a piece of real estate, an apartment building, we know we're going to lose money for 2 or 3 years as we pump money into the property. But it's okay because I can sit there and project my cash flows from there on out. Remember, every investment is the present value of all future cash flow. Every investment is the present value of all future cash flow. You don't necessarily need cash flow today. However, with a company of NIO, like NIO, how do we make this negative 30% margin? What are they explaining? So Mo, in their quarterly release,
they don't say a lot. Really, all they put out is their delivery numbers. So 6,658 vehicles delivered in April of 2023, increase of 31% over year. Total vehicles that they've delivered, 327,255.
Now remember, Tesla was a company that only delivered 50,000 cars. Now they're doing 1.5 million potentially this year. We get it.
And they've delivered about a little under 38,000 this year so far in 2023. So that's good. 22% year-over-year increase. But
what's their average car price, Mo? Can you look that up for me? Now, here's the reason I asked this question.
Here we go.
A great way to compare companies within the same industry is to look at price to sales ratio, okay? Within the same industry. So like compare all the automakers together, compare software businesses together. It's not good for comparing auto to software. So right here, the price to sales ratio is 1.92. Okay, what's Tesla? Well, Tesla, which you guys all know from me is, I think massively overpriced is 6. Oh, sounds like a great deal, right? 1.92 versus 5.73. Well, let's go to Ford, 0.3. Not 3.1, 0.3. Must be a fluke. Let's look at Toyota. 0.71. Okay, must be a fluke. Let's go to Honda. 0.34. Okay, must be a fluke. Let's go to GM. 0.31. Oh boy. Oh boy. Ferrari, the highest gross margin automaker I know. They're at 9, but look at their gross margin. 48%. Their bottom line margin is higher than NIO and Tesla's gross margin, essentially. Tesla's higher, but higher than Ford, Toyota, all that stuff. That's why they have such a high price to sales ratio. And by the way, spoiler alert, they're massively overpriced too. They're selling for 50 and 60 times earnings. So let's go back to NIO. In the car business, you're going to be around 50%, 40 to 60% of 1 year sales as your value. They're at 1.92. But the positive for NIO is what, Mo?
They have growth.
They have growth.
Yeah.
So did you find out their average sale price?
$50,000.
$50,000.
Yeah, about. Maybe a shade under, but they're working to generate lower cost cars.
Okay.
Lower price cars.
Well, they need to. They're in China.
This is expected to launch in 2024, by the way. So they're not there yet.
Okay.
But
so do we have any bull or bear cases on NIO to actually look at here, Mo?
Yeah, so vehicle deliveries have increased 980% since 2018.
I mean, when you make 4 cars in 2018, I'm sure that's easy.
Exactly. Now, this battery swap thing. So they're talking about doing this battery swap thing. What you basically do is you go in and you swap out your battery. So you don't have to worry about the longevity of the battery like you do with Teslas. They can swap 408 per day. We were talking to Dalton about this yesterday. He's saying maybe this could be a high margin business. I don't know. High margin part of the business.
How often do you be changing your battery? Every 2 or 3 years? Or faster?
That's what I don't know.
Okay.
I almost think, I don't know.
So this is a good. So by the way, guys,
this is something that might set them apart from other companies.
Exactly.
Yeah.
So even though I'm crapping on the company financials, there are still very good positives about the company. This whole battery swap. NIO still has these. Are there any more bull cases you can see?
No, that's really about it.
Okay. Besides, are there any non-valuation bear cases on the company?
No.
It's all valuation
based. Yeah.
So back to this. The question you need to ask yourself, how much premium are you willing to pay for NIO for that potential? But you got to remember, when is the bleeding going to stop?
Yeah. And
when is the bleeding going to stop?
Doesn't seem like there's an end in sight.
What level do they have to get to?
Maybe the end in sight thing is when they get a lower cost car, but let's say they do that in 2024. How many lower cost cars do they need to sell to get to a stabilized point? You know what
So look at this. This is their SG&A expense.
Hard.
Sales, general administration expense. This is essentially their overhead for all intents and purposes, not including research and development expense, which is huge. Just assume it's just this 1.4 billion. If their gross margin is 10%, they need to make 14 billion in revenue just to break even on this before all these other expenses occur. That's the thing you have to understand. Like, where are they going to be? So, can they increase their gross margin? Sure, they absolutely can. Well, but these costs seem like they're just going up from here, right?
And
look at their research and development expense.
And quickly.
That's the issue we have, guys. When you look at a company, it's very, very difficult to value a business in which you don't see an end in sight for it's not like look at example, Southwest Airlines. They've been losing money over the last few quarters, last few years, but at least you can sit there and say, wait a second, before COVID, how were they as a company? We can see a long 48-year history before COVID.
Didn't it take them a global pandemic to lose money?
For the first time ever, they lost money. It took a global pandemic.
Yep. So that to me says, okay, yes, it might be hard to get back to there, but once they get back there, it's going to be okay.
But with NIO,
I don't know.
We have no idea.
Yeah.
It's very difficult. So guys, how do we value NIO? Well, remember, as Mo just said, it's a total crapshoot. We have no idea because our stock analyzer tool is really used for companies that are generating profit that you can then present value from the future. We don't know what NIO's long-term profit's going to be.
Yeah.
Look at their profit margin over the last 5 years, minus 45%, and their free cash flow margin minus 24%. So any use of this is going to be way too optimistic and basically useless.
Yeah.
And for that reason, guys, this is why I encourage you. Subscribe to our software. You might sit there and say, well, wait a second, I can't use this, but that's exactly why you need to subscribe. Come in here, learn part of the community, and for the companies that you can value, sit here and use this to your benefit. For a company like NIO, I would focus on the price to sales ratio, but it's not showing me that it's in value territory.
Right.
Wait until NIO is selling for a price to sales ratio at where the other car companies are going with all the growth potential and you see increasing margins. That's what you want to look for in a company like NIO. So come sign up for our software, everythingmoney.com. It's a little over $1 a day. You get all of our tools that are listed here. All the ones you didn't even see. The stock analyzer tool was used 1.3 million times last year by our users. This alone is worth our entire subscription. So sign up now, everythingmoney.com. It can be a little over $1 a day. It gives you all of this. It'll change the way in which you look at money. I can guarantee that. Guys, thank you very much for your time. Go check out our other videos. Take care.